Today's episode is brought to you by SMEs. SoundCartel. Is your business in a position to expand? And are you missing out on new opportunities? Well, swapping a minority share of your business for a big injection of cash could give you the power to move into the fast lane. From SoundCartel, I'm Nicole Goodman, and this is Business Essentials Daily. The Chief Executive and MD of the Australian Business Growth Fund, Anthony Healy, says there are 4 ways small businesses can benefit from growth capital. And he's encouraging SMEs to apply for funding from his public-private partnership. Anthony starts by describing the Australian Business Growth Fund to Jeff Waters.
Yeah, well, the Australian Business Growth Fund was set up to support what is a vital part of the Australian economy, which is what we call small and medium enterprises, or SMEs, entrepreneurs, family-owned businesses that drive economic growth in the country and create jobs for Australians. And we saw a vital gap in the market for serving those businesses or funding those businesses to grow. And that gap tends to sit between venture capital, which is early stage equity funding, and larger buyout funds that tend to write much bigger checks and look for a controlling position in a business. So the federal government and 6 leading banks in Australia got together to set the fund up. And the Australian Business Growth Fund was set up to address this through what is a very specific mandate as to who we invest in. So we clearly invest in established and growing Australian businesses across most industries, and the turnover range is 2 million to 100 million per annum. And we look for businesses with a distinctive and defendable market position and a sustainable competitive advantage and clear growth opportunities in front of them. And how we invest is we take a minority position in the business, a minority stake, so below 50%. It's patient capital, so we'll invest up to 10 years. The initial check size or the initial investment will be between $5 and $15 million with the opportunity for follow-on investment down the track.
And businesses can go to your website for more details, the Australian Business Growth Fund. Now, if I do qualify, if I go through all of the hoops and I can qualify, you say that there are 4 ways that growth capital can accelerate your business. First of all, can you list those 4 ways for me? Sure.
The 4 ways that growth capital can help your business is firstly what I would call moving your business into the fast lane, which is about accelerating growth. The second is opening up new growth possibilities that may not have been achievable before. The third is you can free up resources by investing in capability and other resources. And finally, providing access to additional expertise. So it's not just about the capital, but the expertise that comes with that capital.
So let's go through those one at a time. Number 1, how can it help me and my business move into the fast lane?
Yeah, well, I think compared to what a lot of businesses have to do that are smaller, and that's what we call bootstrapping the business to get it to grow, and there's a bit of hand-to-mouth in that. So getting a chunk of growth capital allows you to accelerate the moves you want to make or the growth that you want to realise. It can help you to better position to claim a first-mover advantage in a market, to win new customers, to enter a new geography, or to launch new products and services. And if your future exit is important, then growth capital gets you there faster or with a higher market value.
And how can it open up new growth opportunities for your business?
Well, I think that running a business is a constant juggling act. You're either focusing on getting more cash in the door or putting the cash you have to best use. And when the purse strings are tight, business owners tend to take, a fairly binary approach. Do I do this or do I do that in terms of spending? So capital enables the business owners to expand their thinking and proactively invest in areas most likely to drive exponential growth for their business. And that frees them from having to choose all the time between one thing or the other thing. They can invest in a number of opportunities where they see growth. So it can provide you with that flexibility in how the money is spent, not just on typical expenditures such as machinery or plant and equipment, but also on operational costs such as hiring staff or boosting marketing expenditure to drive sales.
You know, SMEs has been a long-time supporter of SoundCartel. And now they're helping us bring you this podcast. To find out how Mazars can support your business, visit mazars.com.au. That's mazars.com.au.
How does it help to free up resources?
Well, entrepreneurs wear many hats in their businesses, especially in the earlier stages of their businesses. And as the business grows in size and complexity, this can become very challenging to manage for an entrepreneur. Many business owners wait too long to hire the right people and the capabilities around them that they need to continue growing. They're diverting most of their time and energy toward, administration tasks which take away from the critical areas of the business that might energise or excite them, the things that they need to be thinking about for the future of the business. And so I often say it's the capabilities and skills that have got you here and not the ones that are going to take you to the next stage. And so being able to hire the right people around you and bring in the right capability really can help you to accelerate.
So it doesn't just sound like freeing up resources, but freeing up yourself.
Absolutely, to spend more time working on the business than in the business.
Yes, and thinking the big picture as opposed to the minutiae all the time.
Absolutely.
And finally, what are the additional benefits that can come into my company from growth funding? And I suppose I'm talking about expertise.
Yes, well, when an entrepreneur secures growth capital, they should expect to get much more than just the cheque or the capital that gets invested. Our co-heads of investment, who typically would sit on the boards of the businesses that we invest in, have got decades of experience sitting on boards and supporting the growth of businesses from small to large multinationals. So they bring that expertise and advice. They help guide the owner of the business. They help them make better decisions. They bring their own perspectives in and their networks to really help the business owner navigate their way through lots of tricky situations and help them realise that growth.
An instant brains trust.
Yeah, it is a brains trust of such. And then secondly, we bring with our investment our talent network. And so as we invest in a business, we source talent from our talent network, first of all to look at independent non-executive chairs, but also for other talent that might fill other gaps in the business. But it's the independent chair that's really important. They play a role of mentoring the owner and the management team. They bring their own networks to bear and open doors for the entrepreneur and for that business. They bring their experience typically in the industry or in similar businesses to help the owner make better decisions and guide them along the path. And finally, they bring a level of governance which really sharpens up decision making that you need when you've got an external investor in your business to help you realise those growth opportunities.
That was Anthony Healy, CEO and MD of the Australian Business Growth Fund. This episode of Business Essentials Daily is produced by the team at SoundCartel. Thanks for listening. I'm Nicole Goodman. We'll bring you more Be Daily tomorrow. Follow @BE Daily Podcast across social media and head to bedaily.com.au for more from the Business Essentials Daily podcast. SoundCartel. This episode was brought to you by Mazars. To find out more, visit mazars.com.au. That's mazars.com.au.